this opportunity to share brief update on financial and operational performance of Q1 FY25. The key details are as follows. We sold rupees 502 crores worth of area in Q1 FY25, which is a 30% growth over Q1 FY24. Collections for Q1 FY25 stood at rupees 342 crores, which is a 19% growth over Q1 of FY24. The strong collections has resulted in a net operating cash flow surplus of rupees 100 crores as against rupees 76 crores in Q1 of FY24. Operating revenue in the P&L grew by 348% year-on-year for the 3 months ended June 24 to rupees 316 crores in comparison to rupees 71 crores in the same period in the last financial year. This was because of recognition of revenues from Sunteck, Maxworld, Naigaon and BKC projects. Our core EBITDA stood at rupees 79 crores. However, except for a one-time charge, it would have been close to rupees 170 crore. Adjusted for this, our core EBITDA margin is close to 50% and reported EBITDA margin shall be close to 40%. We were expecting certain height approvals to utilize additional FSI in our existing development at Sunteck City Avenue 2 at ODC Goregaon West. In line with this, the related costs were inventorized in the balance sheet. As we do not want to wait any further for the same, we have now amortized it in the P&L. We reported a net profit of rupees 23 crore for the quarter ended June 24. Our net debt to equity stood at minus 0.01x with a cash surplus of rupees 39 crores. Our total GDV, excluding pre-sales already done, stood at rupees 37,480 crores. Thank you. With this, we open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Puneet Gulati from HSBC. Please go ahead.
Thank you so much and congratulations on good sales momentum and also on the new project. Can you help me understand the broad economics of the Dubai project? How much would it cost you to build? And how would the money flow in from India to Dubai and back from Dubai to India? Is there any tax implication or leakages anywhere? Thank you.
Hi, good evening, Puneet. So this project is in 100% subsidiary of Sunteck. We have invested close to approximately just 250 crores. So it is a quite asset-light model. And the project is obviously, I have said in my opening remarks, it's in the heart of downtown in the Burj Khalifa community near Dubai Mall. And so most of the money obviously will come from the pre-sales. Just for the maybe little bit more investment in the beginning. And no incremental investments we are looking at them very clear. Some small money for the launches and all which may be required, which may go from India, which will be negligible with respect to the size of the project. And cost is obviously the cost of the project is around 2,000 crore, and which most of it should come from the pre-sales. And we all know the Dubai market is doing extremely crazy well, where on the launches the projects are getting sold almost to the 100% tune of. But this project, and being this project in the heart of the, once again at the cost of reputation, heart of the downtown next to Dubai Mall, we don't see any problem there.
Okay, so 9,000 crore GDV, 2,000 crore construction cost, and from that we should look at your share at 50%. And what will be the time to complete, and who will be the construction partner there?
So we are identifying the contractors. So one thing I'm sure you must be knowing, Dubai today has the best of what we struggle in India to find a contractor. Dubai has best of the world's contractor working in Dubai. We know it is the international now capital of the world. So we don't see any problem in finding a contractor to do construction. And we will not be doing constructions ourselves as what we do in India. So we are very clear on that.
And who is the partner and time to complete?
The partner is a group called MAS, M-A-S.
Okay. And time to complete?
So time to complete should be 3 to 4 years.
Okay. That's great. And secondly, if you can talk a bit about the progress on the IFC platform, is there anything that you're likely to conclude? And plus, if you can detail the launch plan for this year.
So IFC, we have already done a platform, you must be aware.
Yes.
We remain committed to that platform and build on that partnership. We are in process of evaluating the right project and obviously hopeful of closing it soon.
Okay. And launch pipeline?
Sorry to interrupt you, sir. May I request you to rejoin the queue?
Sure. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to 2 per participant. If you have a follow-up question, I would request you to rejoin the queue. The next question is from the line of Abhinav Sinha from Jefferies Group. Please go ahead.
Hi, sir, and congratulations to the team on great quarter. So, first question is on Nepean Sea Road. Where are we in the approval process, and do you see the launch this year or maybe next year?
Yeah. Good evening, Abhinav. So, can you repeat your questions, please, once again, if you don't mind?
On Nepean Sea Road, where we are on the approval process and what are the launch timelines?
So, Nepean Sea Road, we have vacated almost most of the tenants there, and we are clearing the site. And approval is in the process. Approvals are in the process. We are at the also advanced stage of designing of the project. As far as launch timeline, I have already mentioned in my last quarter call that we should be looking to launch this in either Q4 of FY25 or Q1 of FY26. That is at the cost of repetition. I have mentioned that earlier in the last quarter call also.
Right. Okay. So secondly, for our growth guidance of this year, it's been a good start. So just wanted to check, how much unsold inventory do we have in all of the projects, as in which is launched but not sold, barring the BKC one? And what is the launch pipeline looking like?
So, to start with your second question first, our launch pipeline. So the launch pipeline, we have lined up few launches in obviously the coming quarter. The combined launches of the Sunteck for this year, what we are planning is close to the GDV value of 5,000 crore. But we are looking at one new phase launch of Sunteck World in Naigaon, one new tower launch in Sunteck Sky Park at Mira Road, one new phase, again a launch of 5th Avenue after now as we are almost completing 4th Avenue. So 5th Avenue at ODC Goregaon West, and one or two more new towers in Sunteck Beach Residences, our SBR project, plus again in one or two more towers in Sunteck Crescent Park at Kalyan. So with all this obviously strong launch pipelines and sustained sales, and again to repeat, combined GDV value of rupees close to 5,000 crore, we expect our pre-sales to grow 30 to 35% in FY25.
Abhinav, Prashant this side. With regards to your first question of the unsold inventory, in our ready-to-move-in project in BKC, our unsold inventory is close to 1,200 crores, and in our ongoing projects, the unsold inventory is close to around 1,600 to 1,700 crores. And in terms of the cost to be incurred for our ongoing projects, it is close to 1,300 to 1,400 crores.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Riddhi from Arihant Capital. Please go ahead.
Thank you for the opportunity and congratulations on the good set of numbers. So I had one question regarding the pre-sale guidance as well as the EBITDA guidance for FY25 and also for the next 2 years. If you could provide that.
You're not clear. Can you mute some instruments around you? I think there is a problem.
Hello, sir.
Ms. Riddhi, may I request you to please use your handset?
Yeah, am I audible?
Yes, ma'am. Better.
Yeah. So just wanted to know the pre-sale guidance for pre-sale as well as EBITDA guidance for FY25 and also for next 2 years.
So, Riddhi, as we have already spoken in our opening remarks, we are looking at a pre-sales growth of achieving of 30 to 35%. That is what we are targeting. And in terms of our EBITDA margin, those numbers are already published in our presentation, and you can look at it from there.
So, would you provide for FY26 and FY27 as well, if you could give some ballpark figure?
Riddhi, we are looking at on a continuous basis, we are looking at 30 to 35% growth year on year.
Okay, thank you, sir. And also for Dubai project, sir, if you could provide, like, are we going to launch phase-wise the project, or if you could elaborate more on that?
So, Riddhi, Dubai, you can't, it's a one single land parcel. And you can't have the phase-wise kind of a thing. So I think we will launch at a time. It's a one single project with maybe 1 tower or 2 towers. And that's how it is. So it will be launched at one single time.
Thank you. The next follow-up question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yes, thank you so much. So just from the cash flow clarification perspective, so would it be fair to assume that had the collection from BKC not been accounted for, the operating cash flow would have been negligible? And if that is the case, why should that be?
So, Puneet, hi, Prashant this side.
Yeah.
Puneet, your understanding is slightly incorrect. It's basically when you are looking at a cash flow from a cash flow perspective, you have to consider the cash flow from all the projects that we are getting. Right. And in certain quarters, the cash flow from one project is higher than the cash flow in the other quarter. So if you look at the number on a yearly basis, like last year we did 484 crores of operating cash flow surplus. Before that we did 428 crores of operating cash flow surplus, at which time my collections from BKC was very negligible. In fact, it was nothing. So I would say that you should not look at it from just 1 quarter perspective. It has to be a more like a 3-4 quarter perspective, that then only you will get to know the right picture. However, BKC collections are definitely helping us in our operating cash flows.
Understood. So just a 1 quarter anomaly here this time.
Yes.
Okay. And secondly, in respect to your BD cost for the projects that you already have in hand, what is the balance to spend on BD?
So, Puneet, the balance cost to be spent on our BD of our existing projects is zero, is nothing.
Okay. Great. Super. Thank you so much and all the best.
Thank you. The next question is from the line of Biplab Dev Burma from Antique Stock Broking. Please go ahead.
Good afternoon, sir. So my first question is on your business development. So, sir, currently, how many projects are we evaluating, and what would be the total GDP of these projects?
So, yeah, Biplab. So we are evaluating obviously a couple of projects. You all know market is good. We have obviously a strong BD team. But it will be very hard for me to disclose anything on this call that what are these projects and what will be their GDP value.
Okay, sir. That's my second question is, sir, from the ongoing projects. What would be the receivables from these ongoing projects from the sold units?
So, Biplab, Prashant this side. The receivables from the ongoing projects is close to around 2,300 to 2,400 crores.
Thank you. The next question is from the line of Charil Gupta from Bearwood Capital. Please go ahead.
Yes, hi. You've given the guidance on, FY26 and FY26 pre-sales growth as well. You were saying, you expect, 30-35% growth to continue. Will you just talk to me about what are the drivers of this pre-sale growth continuing? I see in the GDV, right, year on year, the GDV is growing about 40%. So basically, is this, GDV growth that you think would lead to continued 30-35% growth? What are the trends you're seeing that, give you confidence that you can film this not just in 25 but also in 26?
So we will update you with obviously the new 26 FY26 guidelines to you slowly. But we all know whatever growth we are talking about in FY25, which is only from the existing projects. We have not even considered Nepean Sea Road and Dubai into this, because both those projects are going for the launch. We are considering that if we miss out on Q4 for the Nepean Sea Road launch, still we are confident that we will achieve 30-35% pre-sales growth from our existing projects, because we are launching in every project, because we are left with very little inventory for all the existing projects. So we are launching new phases and new towers in every project. So, this existing projects, which we call our growth engines, these are projects with the inventories of like 6 to 7 years and 8 years. And obviously, while we are talking this, we are also talking about that our BD, right now our GDV value is 30,000 crore, which we are saying that we will continue to add and we'll make it to 60,000 crore over a period of next 2 to 3 years. And before even completion of FY25, we have added this 9,000 crore of GDV from our Dubai project, so which has already taken us close to 40,000 crore. So I think that explains itself. It is self-explanatory that achieving this 30-35% growth year on year on the pre-sales for the next few years is very easily possible.
Got it. Basically, you're saying FY25 we got 30-35% growth from your existing portfolio, just launching new inventory there. And then next year, you'll have the impact of launch of Burj Khalifa and Nepean Sea Road, which is 9,000 crores of total GDV. And so then that will help you continue this growth into the next 2 years, essentially.
Yeah, yes, I think that growth will be, in fact, ideally it should be more than, and plus there is many more projects which are already, which we have already, acquisition has been done, but it has not been added to the GDV value. So to give you one more example, let's say Borivali, SK Resort, which is also there. Plus, there is a bandstand which is there. Plus, there are a few more projects which we are contemplating to, which I don't want to disclose before we complete the transaction, 3-4 projects, which are sizable projects and which we would like to as soon as we close those transactions, we would like to disclose it to the market.
That's helpful. And maybe just last question from my side is, how, do you are both Dubai and Open Sea kind of large projects in terms of year one pre-sales? Do you think, when we launch them in FY26, that will be a big boost year on year to sales? How do you think about sales expectations at Dubai?
So we want to be conservative when we are giving our guidance, which we have maintained at 30-35%. We all know if obviously the launches in Nepean Sea Road and Dubai, looking at the current status of the market, obviously we may achieve much more than 30-35%, but we don't want to overcommit and then underdeliver. We are very clear on that.
Thank you. The next question is from the line of Kunal Lakhan from CLS Group. Please go ahead.
Yeah, I agree. Just clarification on the Dubai project. So the 2,000 crore construction cost includes approvals as well as sales and marketing, or will you be over and above this?
No, I think that includes most of the costs, which includes your sales and marketing and approval cost as well as your construction cost, which is we are talking about almost close to 1 billion dirham. So which is quite enough for a FSI, which is for a sale area which is close to 1 million square feet.
Okay, understood. And secondly, on the Borivali project, what is the status there? And what will be the launch timeline?
So Borivali project, Kunal, I think when we are even little bit uncertain, we don't add the project. We follow this discipline of not adding the project to the GDV value. And hence, I would like to refrain myself to give you any commitment or any timeline about that. The moment we see the possibility of approvals getting expedited, obviously we would first like to add it to the GDV value and then come up with the timelines.
Sure. Okay, thank you so much.
Thank you. The next question is from the line of Ronald Siani from Sharekhan Limited. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. And congratulations on the great set of numbers. Sir, I had a question regarding BKC sales. That has seen quite a good improvement. So, has there been a change in terms of strategy, in terms of selling or pricing? And, what kind of output you can give there, whether this run rate should continue going ahead or, this would be a lumpy each quarter and annual, there will be some target with respect to BKC?
Ronald, Prashant this side. So if you see in BKC in the last 12 months, we have done a pre-sales of close to 355 crores. And this is against 203 crores that we did in previous 3 financial years all put together. So overall, the momentum has definitely picked up in BKC by quite a margin, and we are quite confident that this will continue and it will keep on continuing.
Okay, sir. Thank you very much. That's okay.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to Mr. Kamal Khetan for closing comments.
Thank you all for taking out the time from your busy schedule today. In case if any of your queries have been left unanswered, you can get in touch with us. We look forward to your continued support. Thank you once again for joining us today, and please be safe. Thank you once again. Thanks. Bye.
On behalf of Sunteck Realty, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.